Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look in the gold market. So here, guys, as we said yesterday, it's actually the time where we just could keep watching, and it's not right moment for any active positions on gold market. It's just because it stands near the strong support and it's strongly oversold. So until market reach the important targets and hit the support, and it will be preferable to see what the response will be. I will explain a bit later why it is important. And then we could consider probably scalp long positions, maybe on a lower time frame if you would like to, although I'm really not a big fan currently of this idea. I was considering taking long positions in the gold market right now and going against this miserable plunge that we have seen. So, or once the bounce will happen, that will be or something more or less acceptable for considering taking the new short position, because you're not risking to appear at the oversold and to just crash on a strong support area. So here's on the daily chart. We already talked about the OP around 1804 major level, but here is another important thing, is let's take a look to the left. Here we have also important lows and scrubbers, and the stops will be grabbed here. This market could just squeeze a bit slower and to floor the 1792. So I suggest that probably downside action hardly will stop directly at the OP, but it might be some flirting around 18 even area. On the 4-hour time frame chart, we get nothing about the patterns that we were talking about. Actually, here is very similar situation to the euro. In today's euro video, we're also considering some kind of the potential double repo pattern on the 4-hour time frame chart, and here's the same story. No single close above the 3x3. So by the shape, it remains some kind of the common performance, but for the double repo, but we do not have any close above the 3x3, so we do not have any patterns. On the hourly chart, the same story, although we've got some close above here, drop, but existence of the 1804 target and its recent price performance makes me think that it's more probable the appearing of some kind of the butterfly that will finalize some major OP target on the daily chart. We could consider maybe double repo here on the hourly chart in a case if overall environment on other markets would be different. But as I already showed today in a euro video, so it's absolutely madness. Market already stands around 4.9%. It's 10-year yield. So yes, we expected that it should be, but we not thought that it will be really so fast. So we thought maybe somewhere in November, but take a look, October just has started and already stands near the 5%. So it's a situation that develops really fast. And you can see how it impacts on other markets, so you can see what's going on actually on the stock market, DAX index, S&P. So just total collapse. And well, in current environment, I hardly believe that gold market will be able to show any moderate bounce right there to complete the double repo, showing deep retracement prior than it will complete the major target on a daily chart. So my preferable scenario is that market should first complete the OP and maybe even slip slightly lower. It's just because of these stops below these lows, somewhere around 1790, 1792. And then all it will start forming something. Maybe it's once again will be double repo, maybe it will be some other pattern. But response, by my opinion, reliable response will stand only and will appear only when the market will complete the major targets. So that's actually what we have currently on in gold. So let's keep watching.